and welcome. Of course, we will be getting you all of the coverage this time around of what exactly the Prime Minister's Economic Advisory Council is like to dole out in terms of the FY14 GDP numbers. We've been talking about a range of close to 6.1% to 6.7%. And just a short while ago, you did have the wires which reported that you could probably see that number come in at 6.4%, which to some economists could perhaps be on the higher end of the range. But let's discuss that in further detail with Tirthankar Patnaik, Director and Strategist Institutional Research at Religare Capital Markets, who now joins in on the show. Thanks very much for being with us, Tirthankar. To start off with, how realistic do you think this number we've been seeing for the Indian economy so far?
See, the numbers are slightly higher than our expectations of about 5.8%. We believe that 5.8% number could also have downside bias if the government really chooses to do what it has done in the last 2 quarters of FY13, namely cutting down expenditure to meet fiscal targets. So yes, to us the number seems slightly on the higher side. We have to see essentially what the PMEAC has kept in terms of assumptions on agriculture industry, and how much are they expecting in terms of a revival in services, frankly. So we'll have to wait for the results. So it's slightly on the higher side, and from the FinMin estimates, it's bang in the middle. So for them, it's about 6.1 to 6.7. So this is just about middle there.
Yeah, Tirthankar, that would be the question. How much of an assumption or how much of a weightage is being laid to the rate cycle as well, and how much does it materially impact? Because I've heard scores of businesses saying that they are shutting down certain operations in certain areas due to bleak economic environment, which may not necessarily revive because of a 25 bips or a 50 bips rate cut either.
Absolutely. It's very difficult to imagine that a cut of 25 basis points, by the RBI on May 3rd will straight away start reviving the economy. The economy will take time. In fact, what could happen is that, this cut in interest rates might, instead of helping lower cost of funds for firms, for large firms, especially which move the needle for growth, it might help, spur a little bit of consumption also. It might, make consumption cheaper. So to that extent, what one would expect is probably banks to cut down rates at a meaningful level. So, and that level of liquidity transmission is something we are yet to see. So, we wonder how much is the PMEAC actually factoring in terms of a rate cut by central bank actually factoring into the consumer and at the investment level.
Okay, just a bit of a detour. The flashes on your screen earlier about Bharti Airtel and Rel Jio in an agreement. Now, that will confuse the bulls and the bears on Bharti Airtel both, because you want to know what to make of it, because typically it's been seen as a two-horse pony, with Vodafone being the third one, and now two-horse race rather, with Vodafone being the third one, and now the two horses that were being spoken about are entering into some kind of a pact. So, yeah, an interesting arrangement, and we'll talk more about it. But for now, full focus, of course, on the PMEAC report as well. Bharti Airtel hasn't reacted too much, but let's get in one more voice. Sonal Verma, India economist at Nomura Financial Advisory and Securities, joins us on the show as well. Sonal, good having you as always. 6.4% apparently is the number. We'll have the official number in a minute from now, but assuming that it is 6.4%, what's your initial reaction? In line, I'm guessing.
Well, it is as expected, but our own forecast is about 5.6%, and while I think.
Tirthankar, what would be your estimates, and would it be unimaginable to think that the FY14 CAD projections could be below what most of us estimates? I mean, do you think that PMEAC could be more bullish in terms of the benefits that could come in as a result of just plainly what crude and gold have done?
Okay, so our estimate for FY14 is about 3.9%, which is pretty much what Sonal has been pointing out, given the sensitivities. As to the second question, in terms of what the PMEAC would estimate, going by their previous records, they have habitually been on the slightly more optimistic side. So I would not be surprised if they come up with a number of between 3.5 to 3.6% for current account deficit this year. Let's see what happens, because given the fall in crude and the fall in gold prices, they are likely to estimate about 95 to 98 probably for crude on FY14. So that would give them a substantially lower number than what we have been working with.
Sonal, just to dwell on that point a little more, given that gold and crude have certainly been in focus of late, no doubt we have seen a crackdown, but it does seem to be that there's so many moving parts to that puzzle, because the fall that we've seen in gold as well as crude oil prices is not really warranted when it comes to the fundamental factors. Yes, you did have the slowdown in China, which did attribute to it, but do you think that some of the pullback that we've seen is purely technical and therefore the actual benefits should not percolate when it comes to the CAD number?
I think that's an open question, which is why, even I'm giving.
Okay, let's get in other experts in the picture as well. Sonal, come to you first. We were talking about the CAD numbers, 4.7% versus 5.1%. Surprise you? I mean, a lot of people anticipated the number to be much lower.
It is on the higher side. I guess the decline in oil and gold prices has been a bit too recent to be incorporated in their projections. But as Dr. Rangarajan mentioned, even with
Tirthankar, just wanted to focus on some of the comments that were also made in order to achieve this kind of a growth with respect to speedy implementation of projects. That was a point that was stressed upon. And while he did also talk about infra targets being achieved, he also did take note of the kind of double-digit recession that we are seeing globally. What would you make of some of these points? And do you think that speedy implementation of projects would perhaps be more a function of the government side rather than policy action from the Reserve Bank?
No, I mean, absolutely. Speedy implementation of reserves, of projects, my apologies, would necessarily have to come from the government. We saw the Cabinet Committee of Investment, give the green light to about 580 billion rupees of project investment, yesterday. So we would have to see more clearances coming up from the government. We'll have to see faster environmental clearances, faster forest clearances, things that the CCI has been talking about, and things that would have to go in full gear if we are to meet the 6.4% growth number. Clearly, my understanding is that they have been more than conservative on the current account side. We believe the number would be closer to 4%, slightly even lower than 4%. I think their export growth numbers, their import growth numbers have been fairly on the higher side. I think contrary to what PMEAC has been normally talking about in terms of optimism on the economy, this time I think given the optimism on the economy, they have slightly taken imports at a higher level, and that gives us a fairly high current account deficit number. But to answer your question, frankly, it's the government that would have to do rather than anything from the RBI side in terms of monetary easing.
He did mention that the net import bill on crude will go up because of the quantity of imports, never mind what the price is. But Maithili, would you have any questions for both our experts?
Yes, I have a question for Sonal, which is
4% still seems on the optimistic side.
Tirthankar, I want to play the devil's advocate out here then. He was candid enough to say that investment stays at 35%, investment rate as a percentage of GDP is at 35%, but output has been a problem. And he mentioned about how FDI, clearances of projects, CCI, etc. would probably bring in the kicker in the second quarter itself and going ahead. Would you believe, as Sonal said, that it will be delayed up till the second half, if indeed does come about, or could it actually be slightly earlier in the current fiscal?
I think Sonal is right. It's obviously a much longer cycle than what the PMEAC is actually factoring in. This is not services; these are not contracts that start on the day the government gives clearances. There is a lag between a corporate announcing projects and actually getting funds, those funds getting sanctioned, then actually getting dispersed, and then the work actually starting out. So any kind of revival, expecting it before the third quarter of FY14 is starting, is totally off the mark. Our numbers, as I pointed out earlier, for FY14 are about 5.8%. And frankly, on global growth, I just wanted to add a point there. IMF's numbers over the last couple of years, every time we start the year, we come up with an optimistic estimate, and then the IMF has had to revise its estimates downwards over the last 4-5 years, every which time. So even this year, 3.3 is what we have started with. Probably the PMEAC, as Sonal pointed out, is working with a slightly higher assumption number, even though the commentary did not really mention that. But we might, if we see a repeat of 2012, end up with a much lower number, in which case the global demand for Indian products products, namely our export growth will not see a 9% number. So there is a very high probability, in my opinion, that we may not see such kind of growth in exports going forward.
Mehlali, before we let you go, you have spoken about how some numbers are questionable, but what would be
6%?
That seems to be the consensus though. But on that note, thanks Mehlali for joining in. Sonal as well as Tirthankar, thanks so much for taking the time out and being with us for the last 45 or 50 odd minutes. But that's the verdict on the PMEAC report. 6.4% is what